Every global supercurrency seems unbreakable, until it isn't. What if the world's most trusted money is already on a hidden countdown to collapse, and almost no one sees it coming? History's greatest currencies, the Dutch Gilder, the British pound, the Spanish real, once ruled world trade. Each collapse seemed impossible, right up until the moment it happened. But the real story isn't about sudden disaster. It's about a slow, silent process almost no one notices, until the end is already inevitable. What if you could spot the warning signs before the headlines? In this documentary, you'll learn to decode the 5 hidden stages that always precede the fall of a world reserve currency. If you think reserve currencies only fall after wars or disasters, prepare to see a different pattern, one that's quietly unfolding again, right now. Most people imagine reserve currency collapse as a sudden shock, a war, a revolution, a catastrophic event. But history tells a subtler story. The end doesn't begin with panic. It starts with confidence and the illusion of stability. For decades, the world's leading currency enjoys unrivaled trust. Central banks, governments, and traders treat it as the ultimate safe haven. But beneath the surface, small cracks begin to spread, almost always ignored until it's too late. The real danger isn't chaos, it's complacency. The mechanisms that destroy reserve currencies rarely announce themselves with headlines. Instead, they unfold in 5 hidden stages, each one setting the stage for the next. Why did the mighty Dutch Gilder, once dominant, lose its reserve status despite no obvious disaster striking at first glance? Why did the British pound fade after surviving 2 world wars? The answer lies in these invisible stages. This isn't just ancient history. Today, the US dollar faces rising debt, inflation pressure, and open moves by rivals to diversify reserves. The pattern is familiar, but the outcome isn't inevitable. The lesson is in the sequence, not the prophecy. To understand how reserve currencies truly fall, we must decode the system itself, the incentives, the institutions, and the silent countdown that always ticks beneath the surface. Every reserve currency's decline begins with a hidden shift: debt accumulation. As empires expand, they borrow to fund wars, infrastructure, and global ambitions. At first, this debt seems manageable, backed by trust in the currency's stability. But debt is a double-edged sword. It fuels growth and power, but also creates obligations that must be paid, often with future taxes, inflation, or more borrowing. Over time, the debt burden grows heavier, even as the currency's prestige remains intact. The second stage is imperial overreach. Dominant powers stretch their influence, militarily, economically, diplomatically, believing their currency's supremacy is unassailable. But expansion brings new costs, new enemies, and new vulnerabilities. With overreach comes inflation pressure. To service debts and sustain global commitments, governments often print more currency or debase its value. Inflation may start subtly, but it chips away at purchasing power and trust. The fourth stage is trust erosion. Foreign governments, investors, and even domestic populations begin to question the currency's long-term value. They diversify reserves, seek alternatives, and hedge against future risks, often quietly at first. Finally, the rise of credible alternatives. As trust fades, rival currencies, commodities, or new financial systems gain traction. The old reserve currency loses its network effect, and the world's financial architecture begins to shift beneath it. Each stage feeds the next. Debt begets overreach. Overreach breeds inflation. Inflation saps trust. Eroded trust empowers alternatives. The process is gradual, but the tipping point, when collapse becomes visible, often feels sudden. Insiders rarely see the danger until it's too late. The system rewards optimism and punishes dissent. By the time warning signs reach the public, the countdown is nearly finished. This 5-stage pattern is not a prophecy, but a recurring sequence. It played out in Amsterdam, London, Madrid, and Paris, each time with different actors, but the same underlying logic. Today, as the dollar faces record debts and rising competition, the question isn't whether collapse is imminent. It's whether we can recognize the stages before the final act begins. Consider the Dutch Gilder, the world's first modern reserve currency. In the 17th and 18th centuries, Amsterdam's banks and merchants dominated global trade. The Gilder was trusted from the Baltic to the Caribbean. But beneath the surface, the Dutch Republic was piling up war debts. The Fourth Anglo-Dutch War, from 1780 to 1784, proved especially costly. To finance defense and maintain overseas colonies, the Dutch borrowed heavily, believing their commercial empire could always pay the bills. As debts mounted, the Gilder's stability began to erode. Inflation crept in, and foreign merchants started to question Amsterdam's solvency. Yet, to the outside world, the Dutch system still looked strong, until it suddenly wasn't. By the late 18th century, the Gilder's reserve status was gone. London replaced Amsterdam as the world's financial capital. The Dutch collapse wasn't triggered by a single disaster, but by the slow, invisible progression of the 5 stages. Why did so few see it coming? Insiders trusted the old system. The warning signs, rising debt, inflation, and the shift of trade were visible only in hindsight. The Dutch Gilder's decline set the template for every reserve currency that followed. But the next empire believed it was immune until the same hidden mechanisms began to work against it. The British pound sterling rose to dominance in the 19th century, powered by industrial might and global trade. London's banks became the world's clearinghouse, and the pound was the anchor of international finance. Yet Britain, too, fell into the pattern. The costs of 2 world wars forced the government to borrow on an unprecedented scale. National debt soared, and the Bank of England struggled to maintain the pound's value. Inflation pressures mounted as Britain printed money to pay its bills. Meanwhile, the United States, less damaged by war, with vast resources, emerged as a rival. The dollar's appeal grew, and central banks quietly diversified their reserves. The public clung to the pound's prestige, but trust was eroding behind closed doors. By the mid-20th century, the pound's global role had shrunk. The world's financial system had quietly shifted to the dollar. The British experience revealed the compounding effects of debt, inflation, and emerging alternatives. Each stage built quietly on the last, invisible to most, until the outcome was irreversible. But what about today? As the dollar faces its own pressures, the echoes of Amsterdam and London grow louder. The 5 stages are not just history, they are a living pattern, still unfolding. As the world shifted from London to Washington, the stakes only grew. The dollar's rise was built on the ruins of British debt and the promise of American stability. But the same invisible fractures, debt, overreach, and inflation, began to accumulate beneath the surface. After World War II, the Bretton Woods system locked global finance to the dollar, itself pegged to gold. This arrangement demanded absolute trust in American discipline. Yet, as U.S. spending soared, first on rebuilding, then on war, the gold reserves backing the dollar thinned. Foreign central banks quietly watched as U.S. deficits grew. The world's faith in the dollar remained strong in public, but behind closed doors, doubts multiplied. The 5 stages were repeating: debt, overreach, inflation pressure, trust erosion, and the search for alternatives. By the late 1960s, the U.S. could no longer guarantee full gold convertibility. Allies began redeeming dollars for gold, draining reserves. In 1971, the Nixon administration suspended the gold standard, an act that shocked the world and marked the end of Bretton Woods. The dollar survived, but only by reinventing itself. Now, its dominance rested on trust alone, no longer on gold, but on the credibility of American institutions, the depth of U.S. markets, and the inertia of habit. Yet the incentives that once protected the system now made it vulnerable. Easy borrowing fueled by reserve status encouraged more debt. Political cycles favored short-term fixes over long-term discipline. Each stage compounded the next, just as it had for the Gilder and the pound. As the world's reserve currency, the dollar became both a blessing and a trap. Global demand allowed the U.S. to run persistent deficits, but every new dollar exported abroad was a potential claim on American assets, a silent pressure building in the background. History shows that once trust begins to erode, the process accelerates. Alternatives gather strength, and the incumbents' weaknesses become harder to hide. The countdown is rarely visible until the tipping point is reached. Today, the echoes of past reserve currency declines are unmistakable. The U.S. faces record debt levels, persistent deficits, and a world increasingly willing to question the dollar's supremacy. Major economies, China, Russia, and others, have begun to diversify their reserves. IMF data shows the dollar's share of global reserves has slipped slowly but steadily since the turn of the century. Central banks experiment with currency swaps, gold purchases, and even digital alternatives. Each move is small, but together they signal a search for options, a quiet vote of no confidence in the status quo. Inflation concerns have returned, and with them, questions about the sustainability of ever-expanding government debt. The very privileges of reserve status now invite scrutiny and challenge. Yet, for most, the dollar's dominance still feels unshakable. Its liquidity, network effects, and institutional depth remain unmatched. But history warns. These advantages can erode quietly, long before the public notices. The pattern is not prophecy. No single event dooms a reserve currency. Instead, the system weakens through a series of incentives and choices, each rational in isolation, but collectively corrosive. The lesson from Amsterdam and London is not that collapse is inevitable, but that the warning signs are always visible to those who know where to look, and always invisible to those who trust the surface. Most people imagine reserve currency collapse as a sudden disaster, a market crash, a war, a dramatic policy failure. But the true mechanism is slower, more insidious, and rooted in incentives. Dominance breeds complacency. When a currency is trusted by all, its stewards face little pressure to maintain discipline. Debt grows, standards slip, and the system's foundation quietly weakens. Insiders, politicians, bankers, even central banks often miss the warning signs. Their incentives are aligned with stability, not reform. They see only the surface, liquidity, prestige, and habit. But beneath that surface, trust is not a constant. It is a fragile equilibrium, maintained only as long as the world believes tomorrow will look like today. The real danger is not a single crisis, but the slow migration of confidence. As alternatives become more credible, the incumbents' weaknesses become harder to ignore. The process is gradual until it isn't. Each stage, debt, overreach, inflation, trust erosion, alternatives, feeds the next. By the time the public sees the cracks, the underlying structure has already shifted. This is why reserve currency decline is so often missed. It unfolds in plain sight, disguised as normalcy, until the tipping point arrives. The pattern that matters is not a single event, but a sequence, a hidden countdown of incentives, choices, and trust dynamics that quietly dismantle dominance. People miss it because they look for drama, not drift. They expect collapse to announce itself, but history shows it comes disguised as continuity. The warning sign that deserves attention today is not a headline crisis, but the slow, persistent migration of trust, measured in reserve diversification, alternative payment systems, and the willingness of others to question the old order. Understanding the 5 stages is not about predicting collapse. It is about recognizing the incentives and pressures that quietly reshape the system long before the outcome is obvious. The lesson of every fallen reserve currency is simple. Trust is the true foundation of monetary power, and it erodes not with a bang, but with a whisper. If you can see the invisible countdown, the 5 stages unfolding, you hold a rare lens on global finance and a deeper understanding of the world's hidden systems of power. Which of the 5 stages do you think is most overlooked in today's financial system, and why? Share your perspective below. For a deeper dive into the rise and fall of monetary empires, watch our documentary on the Bretton Woods system next. Subscribe for more untold stories behind the world's financial order.